welcome. You're watching India Today. I'm Sakshi Batra. Well, this is our special edition, Budget Unlocked. India is still the world's fastest growing major economy, but all is not well. The galloping pace is losing some steam, as evident in the latest annual and quarterly GDP growth estimates. The July to September numbers of 5.4% were in fact the lowest in 7 quarters. There's been a lot of economic introspection into the reasons. Here's what the budget 2025 could do to reignite the pace of growth for India.
7 months into his third term as Prime Minister, Narendra Modi faces one of his biggest tests yet. The Indian economy is chugging along, but not at the desired pace. The July to September quarter GDP growth of 5.4% was a 7-quarter low, and the economic growth this fiscal is below the initial estimates of both the Finance Ministry and the RBI. The 5 big reasons identified for this: a decline in manufacturing and industrial growth, a weak consumer demand and high inflation. The middle class has been squeezed by rising costs of living, leading to reduced spending on non-essential goods. Investment slowdown. There's been a notable decline in both private and public investments. The 4th reason, global economic headwinds and weak exports because of geopolitical tensions and disruptions in global supply chains. And lastly, government policies have also faced criticism, with some arguing that measures like taxes, high interest rates and tough lending norms by the RBI might have restricted economic activity. What has also hurt demand is the fact that wages have failed to keep up with inflation in the past 4 years. While corporate profits grew 4-fold in this period, the compounded annual wage growth for various sectors was between 0.8 and 5.4%, showing that salaries have effectively shrunk in an era of high inflation. Economists say the solution is spurring demand. First, by giving relief in income tax and simplifying the taxation process. Secondly, political freebies may be a drain on the exchequer, but may ultimately help increase consumption. Thirdly, by enhancing ease of doing business, particularly for MSMEs and exporters. Fourth, through reforms in factor markets like labour, land and capital could open the doors for greater corporate investment. And fifth, by increasing government capex via public-private partnership to improve the business environment. While several of these steps are already being undertaken in various measures, experts believe a more surgical implementation could be more effective. Bureau Report, Business Today Television.
We're now joined by my colleague Karishma Sudani, who tracks the Ministry of Finance for some exclusive information on what reforms and steps Finance Minister Nirmala Sitharaman could take in this budget to boost consumption, manufacturing and employment across the country. Let's go across to Karishma. Karishma, what do you have for us this time around? What can we expect?
Sakshi, the budget clearly is going to unveil a lot of policies and reforms to support demand and prop up growth despite the slowing economy. We are expecting major tax reforms for individual taxpayers, some kind of rebate and simplification of corporate tax rates and, of course, simplification of comprehensive direct tax code. On the reform side, government is going to come up with policies and support the MSME sector through employment schemes. There is going to be a special mention of artificial intelligence, increased subsidy allocation and boost for agri-economy. Now, private capex is a big challenge for the government, and currently with the numbers, so is the public capex, because the government capex has not been able to perform well in this financial year, and it's unlikely that they could go for a higher target. However, Centre hints very boldly and loudly that the fiscal deficit target remains to be intact, and they're confident of meeting 4.9% despite the absolute number differences.
Right, Karishma, thanks a lot for getting us all that update. You stay glued and we'll continue to take all the updates on what can the budget document carry for all the investors as well as the common people at large. Let us now, in fact, go across to our Business Today editor, Siddharth Zarabi, who explores the various options to bring the shine back to the economy with a panel of top economists.
As we count down to budget day, The one issue that economists agree on is the need to push consumption across India to spur demand in the economy. But it is easier said than done. Finance Minister Nirmala Sitharaman has the difficult task of balancing growth while maintaining fiscal discipline. So what are the options that the Modi government can adopt and opt for this time around? I'm joined by noted economists on the subject, Soumyakanti Ghosh, Chief Economist at India's largest bank, the State Bank of India, Rumki Majumdar, economist at Deloitte, and Dheeraj Nayyar, Chief Economist at one of India's largest conglomerates, Vedanta. Welcome to the show. I'm going to begin with you, Dheeraj, to put things in context for our viewers. What is the state of the Indian economy as we head into the budget week?
Well, I think, as we all know, there is a bit of a slowdown in terms of GDP growth overall. But what we've been seeing for the last few quarters is muted consumption growth. And we all know that consumption is by far the largest contributor to India's GDP. So I think, as we go into the budget, you have one engine, consumption, which is clearly muted. Private investment has been muted for a while. Exports, which is the third engine for growth, may gain a little from the fall in the rupee, but then we have Donald Trump, threatening tariffs on Indian exports. So there's a lot of uncertainty around, the main engines of growth. I guess the one engine which we can expect certain certainty on is government investment spending, which has been high during the term of this government and which may further go up. But that is the primary engine firing. We need at least one or two more engines firing. And I think there is no option but to have the consumption engine firing, given how big it is as a part of our GDP, and of course, a private investment as well. So I think looking at a budget which needs to look at boosting private consumption and private investment. Not everything is strictly budget related, but a budget is a good time to make a statement, to make an intent, and to lay out a vision at a time when growth is a little muted.
With key drivers of the economy seeming to be in a weaker state than before, one of the other questions that has been raised is India in a structural slowdown? Some people tend to believe that yes, that is indeed the case. Others say no, it's a cyclical slowdown. Where do you stand on the debate, and how would you expect the budget to intervene in the current state of the economy?
Yeah, thank you, Zaravi, for having me on the show. I think I'll not get into this fancy term structural cyclical, which are put out by economists just to be a little bit on the harsh side, just to get attentions. So my primary point is that if I give you two sets of data, from 2004 to 14, India's GDP growth rate, average GDP growth rate was 7.2% if we exclude the global financial crisis. And from 2014 to 24, India's average growth rate, 14 to 25 in fact, his average growth rate is at 7.3%, which again excludes the pandemic year. And from 91 till 2025, India's average growth is 6.1%. So we had a 30-year growth rate of 6.1%. We have a 10-year growth rate just before this decade of 7.2%. Remarkably similar growth rate of 7.3%. So when the growth rate moves down from 7.3% to say less than 6%, but that on a quarterly basis, of course, that is disappointing. But having said that, I think even if we grow, say, at the 6.4%, as the CSO has said, maybe there could be some downside to it, we estimate. And next year, the growth rate could be anywhere between 6 to 6.5%. I think still believe we will be doing significantly better than most of the other economies. The only thing is that this growth rate, and even if we say growth go at this rate, and if the growth rate say growth inches up beyond 6.5%, I think that's also a very satisfactory growth rate. The only point of concern, if you ask me, that leaving aside the terms like structural and cyclical, I think that consumption demand has been, there has been concerns of saying that consumption demand is broad-based. In my sense, what is happening to the consumption is that consumption is more happening at the bottom of the pyramid because of the numerous government initiatives which has been happening. And since it is happening at the bottom of the pyramid, so that's why it may not have an exponential push on the overall consumption levels. So from that point of view, the consumption growth rate which we are looking into may not look that good. But my sense is that there could be some amount of consumption boost in the budget just to ensure that the growth rate of 7% which we had last year is sustained. Or the private investment has been now, we are talking about on private investment now for a long time. My sense is that the private investment this year number could be more than 33%. The point of concern, so basically, if I cut the long story short, the point of concern is basically ensuring that the 7% consumption growth is sustained on a continuous basis so that we are able to hit this brand of 6.5% to 7% on a continuous basis. Right now, the trend actually has moved down to between 6 to 6.5%. So I will not call it a structural slowdown or a cyclical slowdown. I'll just call it that maybe a mean reverting and nothing more into it.
Dheeraj, you heard Soumyakanti. I want to add some other comments that have been made in the run to the budget by various people, including the fact that at one end of the economy, the upper end, there is this illusion of a boom due to the higher end, less than 1% of the population continuing to spend very well. But at the lower end, especially in rural India, discretionary spending is markedly lower, and by all metrics, including certain fast-moving metrics, it's clear that that end of the economy is not spending as much as it was before. You agree with Soumyakanti's prescription, and what would you add to it that requires policymakers' attention at this stage?
No, I think everyone has agreed that there should be some boost given to consumption, and I suspect again where you're looking at a boost is in the middle class. It's a nebulous term, but probably again in people living in urban areas, not necessarily tier 1 but tier 2, tier 3 cities. I agree with Soumyakanti to the extent that the lowest segment is probably spending, but their spending doesn't have that impact on GDP growth. So I think you need the middle segment spending more. And I think they are the ones spending less, partly because of inflation, of course. But I think in general, because of the slowdown. And I think in the upper segment as well, you may see some slowdown with the amount of reduction. There's been a correction. There's been in the stock market as well. But I think the main target for policymakers in the budget has to be the middle segment. That clearly needs to spend more. And I suspect if they spend more and if demand grows, then you will see private investment also go up. So I think what we have at the moment is a demand sluggishness, which can be addressed by, of course, maybe cutting taxes. GST is not within the purview of the budget, but direct taxes. And I think, a certain push back up to public investment, which the government had, kind of paused on. Well, pause is a strong word, but had gone relatively slow on in the last year, which was also an election year. So I think a mixture of a public investment boost and a private consumption boost would certainly get the economy to a 6.5 to 7% rate in the short run, growth rate in the short run. I think if the RBI responds as well in February with a cut in the interest rates, I think you'll find that the term structural and cyclical may not be so valid. It may just be a quarter or two of slowdown, and we'll see an upswing again. But I think some actions definitely need to be taken. It's not going to happen automatically.
Rumki, overall tax collections, both on the direct and indirect tax side, have been healthy, and this is a multi-year trend that we've been seeing. Similarly, we have also seen an overall increase in welfare spending. The question I have for you is there fiscal headroom for the government without sacrificing its multi-year path of fiscal deficit to spend more in the near future?
The government has been extremely prudent about where it spends, and I think what the government has done is spend more, which has more long-term long-term returns, and has more capability of creating income and employment. I think that headroom India government has, and it will continue to do so. So it will keep accelerating its effort towards capex. And this year we expect that capex spending will be boosted. There will be some direct benefit transfers also happening to ensure that the rural income is supported and consumption continues. But I think government will make sure that it strongly follows the path of consolidation, because that gives the global investors the confidence that India has control over its finances. And this is something which I have been saying before as well, that over the years, government has steadily reduced its fiscal deficit, and it will ensure that this year also it adheres to the fiscal deficit and the next year as well, because that will keep a control over inflation. It will ensure that the expenses do not crowd out private investment. So there is headroom, but it will be very prudent. Government will be very prudent in spending in capex rather than in revenue expenditure. So clearly, it will be a more spending towards creating employment and income.
Soumyakanti, this mention of GST came up, and just to once again remind our viewers, GST out of the purview of the budget, but there is a federal body, a very powerful one, the GST Council, which should look at those matters. Beyond the budget, is it also time for the GST Council to address some of the pending issues, Soumyakanti, in terms of the structure and rates, which seem to be impacting the rural poor quite significantly?
Yeah, before I answer that question, I just want to add a point on fiscal consolidation. I think every time when the budget is presented, there is a discussion on fiscal consolidation, but I find it rather surprising and strange that if you look into economies which has pulled them out of this pandemic, one of them is the USA today. The USA basically, we call it the US exceptionalism. And even today, the US actually is running at a growth rate which is close to between 2.5 to 3%, and that was because of excessive fiscal spending. Of course, that pushed up the inflation. But for a country like India, I think instead of continuously focusing on consolidation, I think we have done quite well, pushed the deficit from 9.2 to below 5%. And my sense is that there is no harm if we just go a little bit slow on consolidation, maybe at 4.56 or 4.7% and hitting the target 4.5% next year. Because that will actually give the government a lot of headway in terms of pushing capital expenditure, as also trying to give some sort of an income boost to the salaried class. Now, having said that, one of the interesting propositions which I would like to say is that if you do a technical analysis of GST, you will actually find that consumption is more elastic to a cut in indirect taxes rather than a direct taxes, because direct taxes is always supposed to be regressive. Indirect taxes is always supposed to be regressive in nature by its typical structure across all countries, because it's the same across all segments of the population. So by that logic and the elasticity of indirect taxes, if you just do a simple exercise of cutting GST, you will find that the elasticity of indirect taxes to a propensity to consume is much higher than the direct taxes. But that is not outside the purview of the within the budget. But I agree with the view that the time has possibly come to maybe simplify the GST structure. For point number 2, usually in a GST2 reform, which is not inside the budget, but the budget can actually give a hint that we are going to have a GST2 roadmap, whereby you bring electricity into within GST and over a point of time get the fuel under GST, because you have a GST tax structure today in the country, and you can't have 29 different fuel rates across the country, across 29 different states. I think that simply is not done. So my sense, and actually our research also shows that given the base of GST actually has been significantly widened, even if you bring petroleum under GST, which say at the highest level is some amount of cess sharing across the states, I think that the revenue loss to the center of the states will not be that significant. So from that perspective, it is outside the purview of the budget, but the budget can always say that we want to lay a roadmap of GST2, just like the direct tax code, which is going to be implemented in the budget.
Soumyakanti Ghosh, in this environment, what should India's import duties tariff policy be? And that is a subject that still remains within the purview of the union budget.
I think every time there is in the budget, there is a clamor for raising the tariffs. As a proponent of free tariff, I think we should move towards a country with lower tariff rates. But the problem is that if the US is raising tariffs across the board, I think in that case, it will make the things little difficult for India. But the good thing is that if I give you some data, during the last time when the Trump was president and then when became the president, I think India's export basket has significantly broadened towards value-added exports. Engineering exports is now one of them. India is also diversified destination in terms of global South-South trade. So I think these are some of the factors which will have a cushioning impact on the Indian exports, even in an era where tariffs could be imposed. And the other important thing is that I just wanted to make a mention to the currency also. I think one important observation regarding the currency is that during the last time when Trump was president, the currency, I think, depreciated by around 10 to 11%. But when Biden was president, the currency depreciated by close to 29%. In fact, we have seen that during the times of Republicans, the currency actually strengthens. So that is one point which I want to look into. So the recent aberrations in the currency, and Indian currency, I think, is more growth accretive. And of course, it is significantly responsive to US dollar movements, but it's also growth accretive. So once growth comes back, I think there will be a possibility of the rupee actually moving up a little from the current levels, even though currently the scenario is a little bit uncertain. So overall, I think Indian external sector, even though there is some amount of volatility, but my sense is that opportunities are galore, as we have seen in the past, in terms of scaling up exports in value-added segment and diversifying across regions apart from USA and European Union.
Well, viewers, that's all in our special edition tonight. But do stay tuned on to India Today and on Business Today Television as we continue to get you all the exclusives of what you can expect from the upcoming Union Budget 2025. Stay tuned.